LinkedIn, Twitch, Yelp, or Pinterest. You use any of those?
I mean, yeah, but what's your point?
Imagine your life without any of them.
Dude, like, I need my Pinterest boards. Come on.
I mean, yeah, fair. Well, without the world's oldest VC firm, they may never exist.
Damn. Let's get uninvested.
Welcome back to Uninvested, everyone. For today's episode, we have another special guest that will be giving his take on everything Twitter and venture capital.
Aditya Nidmarti is a fellow Northwestern alum. Go Cats, by the way. As an undergrad, he became heavily involved in the Garage, Northwestern's premier startup incubator, while studying economics, business, and entrepreneurship. And after exploring consulting for a summer as an analyst at McKinsey, Aditya then moved on to Bessemer Ventures, where he remains as an investor today.
As a bit of background on Bessemer for our listeners, Bessemer Ventures, BVP as it's commonly known, is officially the oldest venture capital firm in history. Just recently, they closed on two new funds, $3.85 billion for its 12th flagship fund, BVP XII, and a $780 million for its inaugural BVP Forge fund. Bottom line, BVP fuels some of the world's greatest innovations and brightest founders.
Aditya also recently made a jump from BVP New York to BVP London. He's about 1,000 times smarter than Sahil and I, and we are thrilled to learn from him today. How's it going, Aditya?
It's great to be connected. I think it's been a while since we spoke. Sahil, I spoke to you more recently. Crockett about year and a half back, we both connected. So yeah, good to be back and chat more with you guys about my journey, Twitter, and excited to take it to different places that we don't know where it's going to go, but excited about it.
Yeah, super excited to have you on. So we're curious. Like our guests come from all different places, and you're one of the most unique perspectives that we've had on so far. You're a Northwestern alum, just like us, and I'm sure our listeners, especially from Northwestern, are really curious kind of about that background. So let's take us back to like our shoes. Like you're a Northwestern senior. Um, what does your journey look like from there? You go right. Like, what does your path look like? Why don't you just take us back a second?
So let me just take it back even further than that. So my background is that I was born and raised in India, moved to the US for school, had a bunch of internships along the way. Was a two-time intern at the Chicago company called Spot Hero, which is still around. One of the better performing Chicago-based companies from a profitability standpoint, because that's what all companies now care about. And those guys are close to, or if I'm not mistaken, even profitable now. So I had two internships there, then made my way to McKinsey, and then made my way to Bessemer as an investor in New York, and was with them for about 2.5 years in New York, and recently moved over to London. So that's a quick snapshot of my journey. Obviously, there are a lot of nuances and stories along the way, but that's the quick snapshot of my journey so far.
Yeah, so we'd love to know, coming from investing in the States, then going to London, what is the biggest difference when you're investing in a European American company, or really just like a multinational startup?
I wouldn't say there's anything different per se in terms of how we evaluate companies in Europe versus the US. So let me just back up a little bit and explain to you why I moved here in the first place. So
Yeah,
I
that'd be
come
great.
from this point of view where I believe that the best venture capitalists, so if you look at the greats of this industry, the veterans who have been around for 20, 25 years and have had success throughout their career over 25 years, 30 years even in some cases, they've been generalists for life. So what that means is that they'll focus on some areas for some periods of time, 2, 3, 4 years, and they immediately move on and sort of rediscover something new that excites them in terms of a space, in terms of different building blocks that they focus on, in terms of investments, and they are all constantly reinventing themselves. That's also because technology is moving at such a clip where if you get boxed into certain swim lanes, it's hard for you to find the next big thing that might not be in your swim lane. So that's the philosophy I have, where the best venture capitalists, the ones that have the longest careers and have successes throughout those long careers, they're generalists for life with periodic areas of focus. Now, even if you agree, it's sort of counterintuitive, right? Like, America is much stronger from a macro perspective than Europe. And sort of it's counterintuitive for someone to say, no, I'm not going to be investing in America anymore. I'm going to move all the way to Europe. You can argue that emerging markets like India are exciting, and I didn't go there as yet. But sort of it seems counterintuitive on the face of it that why would I leave investing in the American ecosystem and move to Europe? And I'll explain that. So even if you agree that the American macro is twice as strong as the European macro, and let's just put some numbers, 2x for everything, twice the number of companies being formed in America, twice the size of exits, twice the number of VCs, everything is just twice as big as in America as in Europe. Bessemer on a micro level is about 30 times or maybe 25 times bigger in America than it's in Europe. So Europe net is like a 12 and a half times more of an open opportunity in terms of investments than America. And if you come from this belief that you want to be a true generalist, Europe is just more open, because since Bessemer is bigger in the US, you have swim lanes, right? Like, oh, you have to do this. It's not as explicit as that, but sort of you try and do something because you know someone else is doing something, and you can't do that in some ways because they already have like a head start, or they have some level of expertise and network in that space. And sort of you get boxed into different areas, and that just didn't sit well with me with this notion that I really wanted to be a generalist, at least at the early stages of investing, right? Because a founder with a radical idea is not going to be like, I'm creating a fintech company because I know there are a lot of fintech investors out there. The founder is just crazy. Like, they just have this absolutely ridiculous idea about something they're pursuing, and it doesn't have to do with them understanding that there's a lot of money being flown into a certain area. It's just that they have experience, or they just have an idea, or they've worked somewhere where they've seen inefficiencies and they really want to go solve those inefficiencies, really want to solve those inefficiencies. And that's the reason I'm here, because I just feel it's much easier from a micro perspective for me at Bessemer to be a true generalist in Europe than it was in the US. So that's the reasoning behind why I'm here. And now coming back to your question, so I don't think anything changes per se when it comes to us evaluating companies here. The only thing that's different is that it transcends geographies. You know, you're a European investor, you're trying to find companies in the UK, Germany, the Nordics, Eastern Europe for that sense. So it's just cross-border. And in some cases, for the most part, we have been trying to focus on investing in companies that are selling globally. What that means is that even if a company is being formed in Paris, let's say, what excites us the most is that if that company has global ambitions, because any one European country doesn't have enough of a market to sustain big outcomes just by selling to that country. And if you're a software company and you really want to own one vertical that you're building in, chances are high that you'll find customers elsewhere as well. And that's why what excites us the most is that European companies are global. The good ones are global from day one. That doesn't need to be the case for American companies, because you can just say, I want to sell to other American startups, and you can still build a big business. And I'd say that's the difference. One major difference, obviously there are a lot of differences, but one major difference. That doesn't mean that we don't invest in companies that sell to European companies as well. I recently did a Series A in a company called iSecurity, which is out of Amsterdam. And they sell to SMBs pan-Europe. Again, that's a big market, right? There's so many SMBs and SMEs. And if you include all of them in Europe, all countries, that again is a sizable market. So it's a case-by-case thing, but if it's a software company being built in Europe, the good ones are global from day one. I'd say that's the main difference between sort of American software companies. American software companies are also global, but they're not thinking global from day one. European founders and companies are thinking global from day one because they know that their countries are not big markets to sustain big outcomes just by selling to those countries internally.
Okay, I mean, I think, look, the perspective is like invaluable, and I also think it's interesting because I think when most people think of moving to a different market, like to break out of being a generalist or whatever, it's like you're looking specifically to break into a vertical that's like emerging in one country better than the rest. But for you, it's almost like that's not the idea. It's more so just moving to a place where there's like greater, broader power and like greater, broader interest from founders across the landscape. But I'm interested in moving into kind of the follow-up to one of our previous episodes on Twitter. You've clearly expressed, like, as a venture capitalist, all you're doing every day is evaluating companies. Whether or not you are invested or thinking of investing in them, or completely divested from that company and completely removed from it. You are super vocal on Twitter. We've been checking out your Twitter recently, and you have a lot of interesting takes that you put on there all the time. We're curious to know, how do you think Elon's cultural changes that he's brought to Twitter already. Like longer, more demanding hours, very in-person product focused, a lot of product pivots already. So how did you think these changes that he's brought to Twitter are going to affect kind of like the larger, broader startup landscape today?
Yeah, I think a lot about it. And just one quick correction. I don't spend all of my days evaluating companies. I spend all of my days building relationships with founders. That's a slight
Yeah.
distinction in how I view venture. But that aside, so coming back to Twitter, um, I'm not necessarily against Elon's way of doing certain things. So having a riff, saying that we need to get to profitability, demanding workers come into the office, demanding more accountability. These are pretty good things to ask for from your employees. I'm not against that. What I'm against is venting day in, day out against your employees on Twitter, creating sensationalism, and in some ways alienating the people who still work for you, right? I mean, you had this riff and you could easily move on from it and say, okay, we've done the riff, we've got the fat, and now we are a team. We have this global ambition of turning Twitter into something greater than it already is. In some ways, we are trying to recoup or regain what we had lost in all these years because of all the stuff that happened. And let's do it together. But I don't think he's doing that. I think he vents on Twitter every day about this is not working, that is not working. The previous management did that, and then he calls some new reporter and sort of tries to leak information. Like, you're a CEO. Like, make your existing employees believe in a vision, and let's march towards that vision. And I've not seen traits of that coming into sort of the current culture. I have a really good friend who works there, and I keep asking him, like, do you believe in the vision? Like, is there a vision there? And he's like, no, it's just sensationalism. There's some tweet sent out, no, sorry, there's some Slack message sent out, and everyone scrambles, and there's no sort of clear direction, and then you launch Twitter Blue in a very haphazard way, and then you take it off again, and then you pick a fight with Apple. It's just sensationalism. It's just like internet sort of comics or internet memes that are going on, as opposed to running a company and bringing it to profitability and making sure that you're worthy of that 44 billion price tag that you paid for. So
Yes,
it's a jumble opinion, but sort of my overarching thought is that I don't agree with the way he's running the company. Although I do agree that the building blocks are there in place, and sort of it's his job now to connect them and bring everyone together and unite the team and march towards a vision, which is not happening.
So when we're talking about Elon specifically, how do you think his obviously he brings a lot of baggage to Twitter from all his like past. He's had a lot of scandal, he's had scandals, had successes. Like how do you think founder's reputation affects the startups itself? Like, when you're investing in it, or is like Twitter a unique case because Elon is such a known name?
It depends on what kind of reputation are you talking, right? If you tell me, hey, this is a founder who had a failed startup, it doesn't go against them. Everyone fails. You've failed. I've failed. Like, everyone has failures, and sort of you evaluate it on a case by case basis. Now, if you tell me that the founder is coming with baggage like Adam Newman, that's a big red flag, right?
Yeah.
It's gross negligence of corporate culture. It's in some ways outright wire fraud and all these kinds of things. So I think that is a big no-no, and those are big red flags. But if the founder maybe has a failed startup in the past, or maybe was driven out of their previous company because of differences on a professional level, like, you can do your work from a references checking standpoint and get over those kind of humps. But if you're coming with a reputation of gross corporate negligence, or wire fraud or pseudo wire fraud. I'm not saying. I mean, if you're wire fraud, you're convicted for that. Obviously, there's no way we can back you. But you know what I mean, right? In the last 4 or 5 years, it was the founders' market in terms of fundraising, and that gave a lot of power to them, understandably so, and I like that. But it also gave rise to a lot of negligence, lack of corporate controls, and a lot of founders got swayed in the negative direction because of that. And if you do your work and you uncover stories like that, or you uncover episodes like that, then it gets really hard for us as venture capitalists to back them, even though the idea or the company they have might be super compelling.
Right. So, I mean, I love the kind of concept you brought up of like, there's two sides to this, right? We did an episode on Adam Newman in the past. And right there's the one side which is like, look, you have a massive firm like Andreessen who's willing to reinvest in him, and they've probably done their due diligence on his new deal. But then there's like the people, and there's the labor side, right? Like, do you think it's even possible for Elon at this point to change Twitter employees' like reputational image of him, or is it just completely damaged? Like, is there no coming back from this point from his employees' perspective, or even as a founder, like, how do you recoup that reputational damage, if you would call it damage?
My ideal case, if I were Elon, would be to do what he did in the initial days without doing all the sensationalism that he did, and then immediately turn the page and say, the stuff we had to do from a cost cutting standpoint is done. This is what I require from my workforce: hard work, extreme motivation. And for those things, we're going to put a policy in place, things like, less vacation or less freebies or less perks, because first of all, the market's not that good, but we also need extreme um, controls in place to make sure everyone's working without us spending that much money. It all comes from a money standpoint, right? You want to save money because money is expensive, and you've personally paid a huge price tag, and you want to justify that price tag and pay for the debt that you have. And then we have this vision that we want to march towards. So that all is missing. And given the pain that has been caused, and I'll give you a small anecdote. We were at dinner in London, and it was myself, one of my friends from Facebook, and the other friend from Twitter. And we were enjoying a dinner, and my friend from Twitter does not have Slack on his phone. For some reason or the other, he couldn't download Slack because he also moved from the US, and sort of it had an app store that was linked to the US, and just he didn't have Slack on his phone. And he got an email from his colleague saying, hey, there's been this massive group created on Slack where Elon's asking everyone to send code reviews. And a normal person would be like, okay, I can look at that once dinner gets done, 20, 30, 40 minutes from now. That's what anyone would do, right? Because we have managers who are understanding, and obviously, like, no one's going to get penalized for replying 40 minutes later because you're eating dinner on a Friday at 9 p.m. But no, the amount of fear this person had, he literally ran back, took a cab, went home because wanted to check Slack on his computer. Like,
Wow.
that's the kind of fear that's been instilled. And if you're trying to build a world-class organization and trying to justify a $44 billion price tag, you can't have fear. You need to empower the independent contributor, the machine learning scientist, the machine learning engineer, or the data scientist, or the marketer, or any person. Like, they have to be independently empowered to do what they do best, as opposed to someone coming with this vision from a top-down approach saying, no, you have to do that, or you have to do this, or that person has to do that. And this takes me back to economies. Like, centrally planned authoritarian states have always failed. The best companies are ones that drive innovation from within, where people can come up with ideas, have viable solutions to make those ideas a reality. And if they don't work, they're not penalized for failure. I was looking at a podcast or listening to a podcast where Sundar Pichai was explaining how Google has multiple startups within Google, where many of them fail, but the ones that succeed end up being massive product lines for Google. Like, that's the culture they have instilled. And it's not Sundar telling person A or person B, like, no, you have to build something like Google Chrome. Like, Sundar built Google Chrome back in the day, and probably it came from this extreme level of entrepreneurship within Google. But Larry or Sergey didn't tell Sundar that you have to build a browser. Like, probably it was his idea, and he had some resources that they gave him to test that idea out. That's how you go from being a company that's as badly managed as Twitter to something like Google that's constantly reinnovating itself.
So what is this thought like? For part of me, I thought like Elon, all these tweets was like a marketing tactic per se. Really like flip the switch on Twitter, and I clearly it's like affecting the employees themselves. So what are your thoughts like the idea of like all publicity is good publicity, and especially like when it's about the internal aspects of the company itself? Like, should the public have access to the type of transparency that Twitter's providing, or do you think that's really hurting the employees even more?
I would argue that it hurts employees even more. Twitter is a private company. It doesn't need everything to be public. Um, why should the public know what standards employees are being held up to? Like, if you're telling employees, like, no, we're going to cut lunch tomorrow because we don't have enough money to pay for lunch because we need to be profitable. Like, why does the average Joe on the street need to know that? Why does the average Joe need to know what a Twitter employee is losing? Like, oh, we're going to reduce salaries, or oh, we're going to reduce the number of holidays you're given, or oh, we're going to reduce lunch. Like, these things add pressure in ways that can't be quantified. And you don't want to put your employees through that. Rather, you need to win them over by saying, see, we know these things are there. We know that the economy is not doing too well. We know we have this huge debt burden, which we need to service. And the only way we can service it is by reducing the cost structure we have. And it's going to be painful, but we are all here to share the pain along with you. And let's make this grand vision we have, which he hasn't shared, a reality. Instead of going on Twitter and saying, no, we're going to slash salaries, or we're going to reduce the number of holidays you get, or we're going to reduce the lunch you get. Like, why? It's just unnecessary. It doesn't add any value, and it hurts the employees in ways that can't be quantified. It's more like a emotional pain and stuff that employees need to go to. Like, if you're being told that your salary is being capped or being reduced, like your number of holidays are being taken away, like you're not going to get the free lunch that you got every day, like, doesn't that piss employees off in some ways? And then you rub salt on those wounds by making that public, where some random person like a bot is interacting with that tweet and just like talking nonsense. It's just adding salt on the wounds, which is just unnecessary.
So, I mean, obviously, like, public reactions to this are everything. It's why we asked the question in the first place about, like, is all PR good PR? We see, like, there's this massive split. There's still a largely cult-like following of Twitter, like Twitter loyalists, people who are sticking with it, who like eat the stuff up and they love to follow it on Twitter. And then there's this other group of people who are completely breaking away, divesting from Twitter, like an anti-Elon crowd, people who are saying, Twitter is going to fail, and then another startup is going to come take its place, like the next big social media thing. We're curious, like, let's imagine that happens. Like, do you think the social media space is just oversaturated in general? Is this an opportunity for someone else to come break in and kind of make up for the losses that Twitter is clearly putting out? What are your thoughts on the social media space in general?
I think I don't want to generalize social media. Firstly, let's talk about Twitter. I think Twitter serves a pretty good problem in the market, right? You want to directly hear from people you trust and people you follow. Like, you directly want to hear their unfiltered views, and Twitter does a great job for that. You can argue like, oh, there can be another Twitter. Like, Twitter is not that hard to engineer, but it's hard to get all those people that are already on Twitter. And sort of network effects play really well into Twitter's hands, and Twitter needs to leverage that. So I think Twitter provides great utility. I think I would be more than happy to pay for Twitter. And so I don't, if they can, it can go really wrong from here. If Elon and team do something really drastic and radical, it could go wrong, where it could alienate a certain class of people and take them away from Twitter. And Twitter's value is with more people engaging with the platform, right? Like, if you alienate a certain group of people, I don't know how many of those people will actually end up leaving Twitter. But myself, for example, I have muted almost 30 people in the last 1 month. And before that, I'd muted like maybe 3 people over the last 10 years. It's just gotten extremely polarizing to the extent where it's not, I don't know how to put it in words, but it's not living up to what it's built to live up to, which is constant dialogue. It's less polarizing. It should be less polarizing. They should be really good dialogue on it. And some of the things that Elon has proposed, like, making sure that the bots are removed, making sure that people actually who they are the right things. The question is execution, and execution so far has been pathetic. So I think Twitter as a utility has a lot of value. The other social media platforms I use are Instagram. I think Instagram, I don't know how to define it as a social media platform. I mainly use it as a mood board. I'm just basically sharing the stuff I'm eating or the places I'm traveling to. I basically have less than 400 followers, so it's a close knit kind of community for me. So I can't make a comment on whether whether Instagram is saturated or no. And TikTok, I'm not a big TikTok user, but I can see a lot of value that TikTok provides. So I don't think social media, would you include TikTok as social media?
Oh yeah, I would
No,
absolutely
yeah,
include it.
exactly. Like Be Real, TikTok, all those I would say are social media, just ways of like communicating with people that necessarily aren't with you.
Yeah, so I agree that social media has been overdone. I think the business models are not viable anymore. The business models that social media companies use in the past, which is, let's hook people on with some novel tool or some novel thing that they can do, share photos or add filters or comment on things and all those kinds of things. And then on the back end, we can monetize based on this activity because we can sell this data to different advertisers who can advertise products and people will buy those things. I think that business model of advertising with the hook being some sort of gamification is done. The first hook was actual utility, right? Like Facebook allowed you to connect with different people, an actual utility. Instagram allowed you to actually share photos, actual utility. Twitter allowed you to actually share your thoughts and hear other people's thoughts and interact with them, actual utility. But be real, like sharing a photo at one particular point in your day, like what is the utility in that? Instagram can do that, Snapchat can do that. You can do that without even those platforms being designed for that. Like if you decide at 2 o'clock every day, I want to post an Instagram story on what I'm doing, you can do that. And they gamified it even more and saying, okay, we're going to make everyone do it at 2 o'clock. But there's no real innovation there. Like there's no utility there. It's just basically, it's a game. It's fun. But if it's fun, it's also probably a fad to a certain degree. And a fad doesn't have a business model that works in the long run, at least in the way I think about it. So, in a utopian world, you can argue that, oh, so many people are using BeReal, so BeReal doesn't need to have ads and they can have a subscription model. Will you pay $10 a month to share a photo once a day and look at like maybe 15 other people's photos once a day? I wouldn't. So as long as it's free and as long as it's being funded by VC dollars, yeah, you'll find users because maybe you can advertise, maybe you have like a unique product eventually. But what's defensible in that? Instagram can copy it. Instagram copied Snapchat stories. Like Instagram stories are big, if not bigger than Snapchat stories now. And there's nothing inherently defensible in BeReal. So the way I put it is the incremental social media platform that's coming up is really nothing new and doesn't provide any more utility than what it's trying to replace. And it doesn't have a viable business model today that can help it survive. That's the way I put it. So in some ways, yes, it's overdone today.
Yeah, that's what I thought. I consider like most of these new social medias to be like features rather than products. You saw Clubhouse fail for the exact reason. Like it was a feature, not really like a necessarily product. Or you're exactly right. You can take like 100,000 engineers from Meta, put anything you want right into Instagram. It's like very easy process. But we're running up on time, so I really want to ask one more question. We love to ask all our guests is what is one routine or staple that you followed throughout the years? Something that stayed consistent in your life. Maybe it's a breakfast that you have every day.
I constantly keep thinking about what my edge is, right? I mean, you have so many people out here doing the same thing. And in some ways, I constantly keep asking myself, what is my edge that's going to help me keep doing what I love doing for a few more years and then some more? And obviously, the answer keeps varying from one point to another, but I constantly keep looking at my historical life. Like, and at pivotal moments, why did I do what I did? And then you sort of draw inspiration from that, which helps you inform your future decisions. And obviously, that analysis just keeps changing over time. But I'm constantly trying to connect the dots between what I did 5 years back. Was it with the same intention that I did something 2 years back? And was the same intention relevant to what I did today? And I keep sort of repeating that exercise time and time again. So that's one of the rituals. I don't know if that makes sense. That's a little vague, but
it completely makes sense. And what's funny is like I think you're one of the first people who hasn't given us the answer of just I like to meditate every day. So that actually might be my favorite answer so far.
Yeah, it's like this. It's still like in the same nature, kind of like this like reflective nature.
And that helps me understand that if there is going to be a decision like that to take in the future, will I have an edge or will there be something that I know that others don't know while I'm making that same decision? Coming back to sort of what I explained earlier, like sort of I connected the dots and that helped me easily make this decision about coming to Europe because it's counterintuitive, right? For someone who's moved all the way from India, my parents are asking me like, why the hell are you going to Europe? Like we sent you to the US, like literally it was such a big decision to send you all the way from India to the US. Like you're leaving the US and going to Europe, like it makes no sense. And then sort of walk them through my analysis. And I could come up with that analysis because I've taken decisions like that in the past, which have seemed really counterintuitive, but have helped me develop an edge by sort of analyzing those things in the past. So yeah, that's an exercise that I keep repeating time and time again.
I love it. I absolutely love it. Well, we're approaching time, but if you our listeners out there, if you haven't realized it already, Aditya has possibly one of the sharpest and most informed theses on everything from Twitter to social media to investing abroad versus here, even on building relationships with founders, which I think is probably most important. But if you want to stay tuned with all of Aditya's thoughts, you can check out his Twitter, which will be right here. Make sure to stay tuned with us on UNinvested, and hopefully we can have you back on very, very soon.
Thank you for having me, guys. Appreciate it.
Of course.
Yeah, thank you for coming on.
But as always,
I'm Sahil Seth.
I'm Crockett Calloway.
I'm Aditya Nidmarti.
And this is UNinvested.
Thank you. Make sure to follow us on Instagram at un.invested.
Subscribe to our YouTube.
You're going to want to follow us. We got some crazy interviews coming out. Peace. This is a personal video. Any views or opinions represented in this video are personal and do not represent those of people, institutions, or organizations we may or may not be associated with in a professional or personal capacity.
The views expressed are for entertainment purposes only and not to be misinterpreted as actionable investment advice.